Ooh. I've heard rumblings about this from lenders about reserves and insurance and problems with things like that around HOA communities, but I really did not grasp the absolute extent of this issue until I just read a recent article which was published by the Minnesota Reformer on March 13th, 2025. This was written by Madison McVan and titled HOA Files: Homeowners Confront Huge Bills, Conflicts of Interest, and Bad Insurance Options. This article really exposed some serious problems that homeowners in townhome and condo communities are facing right now. And if you live in one or you're thinking about buying a home in a community that has attached homes in an HOA, you're going to want to hear this. I'm Mary Schumann. I am a realtor here in the Minneapolis area, and I make videos to help home buyers and sellers make smart choices. In the article, which I'm going to link to in my description box down below, McVan really addresses a series of issues with HOAs and the huge financial implications that they have for people that buy into these communities. Those that she profiled were on the hook for massive special assessments and left feeling devastated by these bills and feeling betrayed by their association. And sometimes because they were unable to pay, they actually found themselves being foreclosed on. A key problem was board members who have financial ties to contractors, property managers, or even insurance providers. Instead of looking for the best deal or the highest quality service, they might be steering contracts toward their own business connections or even their own companies. One of the biggest issues that McVan highlights is a conflict of interest within HOAs, and this occurs when the management company that the homeowners are paying to run the HOA also, just happens to own a construction and maintenance company and funnels all the repairs through that company. It's not every HOA, but these larger companies often have a maintenance arm that's attached to it. Many homeowners are assuming that their association is working in their best interest, but that is not always the case. Oftentimes, these repair contracts are awarded to the company owned by the management company. This happens without any competitive bidding, which may have lowered the cost for the homeowners. There's also an obvious incentive for these companies to look for required repair and then to make a claim on the insurance. This means that homeowners end up paying for inflated costs for maintenance repairs or that services may not even be necessary. Since HOAs have the power to levy special assessments, you could be hit with unexpected bills that you have no choice but to pay. And then there's the issue of HOA insurance, or should we say lack thereof. Many homeowners assume their HOA has solid insurance coverage that will protect shared spaces and even their homes in case of disaster, but in reality, a lot of associations are underinsured or have policies that just barely cover the basics. One of the examples the article discussed pertained to roof damage to the community, and the deductible on the common insurance was $2.6 million. The roof repair, however, came in at $1.7 million, which meant that the homeowners themselves were on the hook for the entire bill. Insurance covered zero of it. Some HOAs go for the cheapest option for insurance, leaving homeowners on the hook for costly repairs. Others require residents to buy into policies that aren't competitive and charge way more than they should. And the worst part, because homeowners are a part of a collective, they don't always have the ability to shop around for a better rate and better coverage. So one way for homeowners in these communities to mitigate against this is to purchase insurance for the interior of your unit, as well as something called loss assessment coverage, which can help you cover unexpected special assessments. Another huge issue, and I actually have personal experience with this, is that HOA boards are run by volunteers, and it's really a thankless job. Property managers offer expertise and man hours that they can put into managing the problems encountered by the HOA. But oftentimes, board seats remain unfilled because really, who the heck wants to step up and serve in what can feel like work and service of people who are eternally angry at you? and also homeowners that rarely show up to meetings. McVan's article shared stories of homeowners that are stuck in impossible situations, facing major repair costs and denied claims or sudden premium hikes that they actually never saw coming. As a realtor, I actually see another issue that was not covered in the article. When large assessments are placed on homeowners, it makes their property difficult to sell, and it cuts into the equity that the homeowner may have if they have to pay off an assessment prior to selling or out of proceeds when they do sell. So if you're looking at listings for condos, you'll see assessments pending in the listing, and you'll also see what that does to the market time and the prices of those condos. If the assessment isn't accounted for in a lower price or some statement about how this is going to be handled at closing, it's very easy for a buyer to just pick another home because condos are plentiful. In addition to the things that I've already mentioned, if the master policy isn't sufficient for possible damage, lenders are often refusing to give loans on homes in these HOA communities. Insurance rates have nearly doubled between 2022 and 2024, and the requirements by lenders have become ever more stringent. Because insurance companies have suffered a lot of losses, they are starting to pull out of covering HOA communities, and with fewer options available, it makes it more difficult to find affordable insurance, which is one of the reasons you're going to see these enormous deductibles because high deductible insurance costs less overall. Homeowners are then left with few choices. If they sue the HOA or the management company, the cost of defending that suit by the HOA is likely to be passed on to residents in the form of assessments. Good news. Goodish news. The Minnesota state legislature has bipartisan legislation in front of it that would require property managers and HOA board members to declare conflicts of interest, and it would create new transparency requirements and ensure that residents can contest an HOA fine. So no surprise that some of the property management companies are actually encouraging HOA board members to oppose this legislation. And I'm just going to say, if you're an HOA board member, I would call in support of it. So the bottom line, HOA management can lead to financial nightmares, special assessments, rising fees, legal battles. Yay! It's like lions and tigers and bears. These are the real costs that can impact your property values and home affordability. For buyers, it's a huge reminder that you really need to research the HOA thoroughly, use your 10-day period before you move in. For current homeowners, it's a call to stay involved, attend meetings, ask questions, and push for transparency. So what do you think? Have you had a bad experience with an HOA? Drop your story in the comments. I'd love to hear what you've encountered. And if you're thinking about buying a home here in an HOA or not in an HOA, hopefully, we actually don't have a lot of HOAs that are not associated with condos, but make sure you know exactly what you're signing up for if it is in an HOA. And if you need help navigating the process, reach out because I'd be happy to help you. Thanks for watching, and I will see you next time.